Very good evening to everyone, and welcome to this new edition of Pulse. This is our first Pulse for the new year. So, first of all, on behalf of IIFL Securities, I would like to wish all of you a very happy new year. This particular uh, cast that we are doing today is to talk about, how the financial market are expected to do next year, and we will also be taking queries, if you have any, on the markets for this next year. Now, coming to the main points that we are going to discuss today. The first point was, would 2019 be very similar to 2018? So, to this, the it's quite simple that this is a year of general elections. So obviously, it cannot be similar. The expectation levels are very different. The expectation on the volatility also for 2019 is likely to be significantly higher relative to 2018. Coming to how the various indices and how various sectors have performed, clearly, if you look at 2018, you had, though the main index going up by around 6%, you had significant meltdown in the small cap and the mid cap space, with a lot of stocks going down by even as high as 35 to 45%. So it was quite a tough year. Now, what do we think will be the scenario for next year? Now, we clearly believe that this year could be quite interesting, considering that whenever you looked at the history, whenever we have seen the small cap stocks coming down considerably, the next year has given significant uptick. Like, for example, if you talk about 2008, then 2009 was a very good year. Similar thing happened in 2011. Then even in 13, so 13 was a very bad year. Then 14 came out to be a very good year for mid caps, where they significantly outperformed the large caps. So does that mean that you should buy small caps for next 4 to 5 months? The answer to that is no. Small caps should be bought only from a perspective of 3 years and beyond. The valuation have come down significantly. Now, what is the reason that we are saying that small cap is now looking attractive? See, large part of the small cap universe which is there in India is dependent on crude price, which has significantly come down relative to what it was earlier. It's now down by in last 3 months by close to more than 20%. So that would be one benefit which will be there for the sector relative to where things were at least a quarter back. Coming to the impact of elections, see, look at it this way. Right from the time of, say, we talk about the Rajiv Gandhi government, and then later on, whether it was VP Singh, Chandrasekhar, PV Narasimha Rao, Vajpayee, Devagowda, Gujral, uh, Manmohan Singh, Modi. Every time, irrespective of who's in power, over a period of 5 years, what we have seen is that equity markets continue to do pretty well. So we have had a case in 2014 for the first time when we have, after a long period, that we have had, an absolute majority government, whereas all the previous governments were all coalition governments. So I understand that there is this fear in the mind of investors that what happens if the current government doesn't come back. So our view is that it might have a negative impact by 4 to 5% for the index for a short period of time. But going forward, things are likely, market is likely to take such things in strides. So let us look at the four scenarios which could happen in the election, and what could be the possible market reaction, both from a short term as well as a medium term perspective. Because long term, clearly, irrespective of what happens, Indian growth story continues to be one of the best, with the growth rate of more than 8%, beating all other markets in terms of growth. Coming to the first scenario, which is that Modi comes back with an absolute majority, I think the market is going to like it. Reformers are going to stabilize. You might see some kind of an improvement per se on the fiscal side, because before the election we might see some amount of slippage with government giving sops to farmers as well as middle class, considering they were touted in the recently held elections in Madhya Pradesh and Rajasthan. Uh, Going forward, if the situation is that we see a coalition government which is led by Modi, the market view on that will be, you know, it will be positive, but I don't think so too positive, because the fiscal slippage may happen in that particular kind of scenario, because for this government it would be very important to ensure that the coalition partners are also very happy. In case we see that the Congress government comes in, or maybe a fourth front kind of a government comes in with the support of the Congress party, in that kind of a scenario, one may see, a downside in the index, especially after the result for some period. Uh, but over a period of time, I think from a medium term perspective, the view on such a scenario would be a neutral view on the impact of elections on the market. Because if you see historically as well, whenever there's been a change of guard, it may not result in a similar kind of a market scenario at the end of the term. Like we have clearly seen in case of UPA2, when there was an upper circuit in the market, and later on, people were cribbing a lot in 2013. Uh, in 2014, people were very gung ho about the current dispensation, but right now, there is amount little bit of lethargy which is been creeping in. The next question that we had talked about was, what is the joker in the pack in the Indian market? So let us look at from a perspective that what are the different factors which will impact. Um, so I think so. Crude is one of the main factors which is there uh, in terms of how the macro environment for India you know happens. So that is one critical thing. Coming to more of the specific factors which are there, so let us put down, I think so, the first risk to the market could be a further delay in earnings growth. Clearly the second quarter numbers, though the top line growth was close to 28%, the bottom line it was getting impacted because of higher commodity prices. So that is the number one concern that as investors we should be having. The number two is about stock valuations. So the large cap in India are not too cheap. The index is trading at slightly lower than median plus two standard deviation. So it needs to remain here and come down by earnings upgrades. So that is what we would want, because if we see earnings getting continuously downgraded, then the valuation will be a concern. The third is obviously the political uncertainty that we have already spoken about. Fourth is a slowdown in US or even a global slowdown. We clearly saw, if you checked Apple result, in Greater China, they saw a significant downtick in terms of growth, and the new products which Apple is coming with, they are not getting good traction. Just keep in mind, a stock like Apple is currently trading at around 12 multiple. It has close to around $200 billion of cash, and it's available at around 650 odd $1 billion of market cap. So significant downtick has happened in Apple over last 4 5 months. So there are obviously those concerns, and then there is a concern of Fed increasing rates. So in case of Fed, I think so. Probably as of now, their guidance is for two rate hikes. I don't see that being upgraded to three hikes, though there is a likelihood that over this next 12 months, that could come down to one hike, considering that the US economy is also slowing down a bit, and large part of the stock price bell creation had happened in the fan stocks, which has now significantly come down. One more question which people have asked over a period of time is, what do you see the asset allocation mix that people should have into debt and equity? I think so. It's more of a risk. Risk, it depends on the risk profile of that particular person. But obviously, equity returns are likely to be better related to 2018, considering that 2018 was a bad year. People will also ask have also asked about which are the top sectors to invest in. So for us, the private sector banks such as ICICI Bank, Axis Banks, those are the kind of stocks one needs to look at. If you're slightly conservative, then probably something like a HDFC Bank would be a good buy for investors. From a capital goods space, Larsen and Toubro, where we are seeing a significant improvement on the balance sheet size, could be another stock that one should look at buying. We would continue to be negative on the the PSU space, because we feel that in that particular space right now there's still more issues which are there. So we would not like to bottom fish as of now, except for an odd SPI. Uh, these are some of the major things that have investors typically have asked us. So if there are any further questions that you have, you can ask in the comment section, and we can just reply back on those. Right. One of the questions that I've just been told is, people are asking about that, what are the major themes which are there for investment for this year. So as such, if you look at from a sectoral perspective, take for example metals. Clearly the valuations have become cheap, but at the same time you've had the case that there is a global slowdown, especially in China, which is impacting the sector. We've already seen a CRR cut, in fact, today of 100 basis point in China, which is likely to lead to some rally in the metal stocks. As for the other sectors, in case of automobiles, a stock like Tata Motors, there is some improvement that one is seeing, early signs of improvement in case of JLR. If that does sustain, so I think so SIP kind of a mode of investing in Tata Motors could be looked at. However, if you want to play the sector, we would ask you to be focusing more on things like the tire sector, where we see significant improvement in bottom line because of sustained automobile growth, as well as expansion in margin, especially on a QOQ perspective over the next 6 months because of lower raw material prices. In case of IT, we are more bullish on companies like Mindtree, where we see that the stocks have corrected a lot and still earnings are likely to be quite sustainable. Still, the tailwinds in terms of currency have not happened. This anyway is a weak quarter for the sector. So, what the real picture for the IT will only get to be known only after the March quarter results. Coming to oil and gas, in case of oil and gas, we are very bullish on companies like Reliance, because we believe that with the new regasification coming up of its refinery, at least a $1.5 to $2 incremental GRM could be made. So even though there is a softness in terms of existing GRMs for Reliance, we clearly see that it being an internet model, on the telecom side, you could see a revenue market share for Reliance Jio for close to around 42% over the next 2 years, which could really turn the heat on players like Vodafone Idea, which could go down from position 1 to 3, since they don't have significant amount of money for capex. In terms of banks, as we had already discussed, private sector banks is what we are liking, and the PSU space is negative. Within NBFC, there are select NBFCs that we like for example, Cholamandalam, which looks quite attractive to us considering the growth which is there. Even somebody wants to take higher risk, then recently we looked at a company called Credit Grameen, which is trading at a multiple of close to 2x, 50% kind of earnings growth. That stock also looks quite attractive to us. So broadly, these are our sector themes. Capital goods we have already spoken about, Larsen and Toubro, and if you look at the consumer side, we believe that they could do a switch trade from HUL to ITC, because we don't see a significant uptick in taxation for ITC. The valuation gap is HUL is trading at 55x and ITC is trading at 25x. So the multiple difference is quite high, and we believe that there could be underperformance of HUL relative to ITC over next 12 months. So if there are some other questions, we can take that. Otherwise, we'll just wrap it up. Are there any questions?
Yes, we have a question. What is your outlook on consumer electronics over the next 1 year?
Okay. So somebody has asked a question on what is the outlook on consumer electronics. Now, see, consumer electronics you need to look at from a very company-specific basis. We believe, sector like air conditioning, we clearly are seeing an improvement happening in last couple of weeks and months, where there's been a 2 to 3% increase in pricing also, which has happened. However, if you look at the normal wire harness and cables, that kind of a segment within the electronic side, there we are not seeing an improvement in business. So to look at from that perspective, I think so one could be more positive on companies like Voltas, and look at companies like Hitachi, Blue Star. Those will be the kind of companies that we would be looking at from that particular space. Companies like IFB, they have corrected a lot. Uh, I think so. If we do see that going forward in this particular quarter, they are able to you know take the benefit of the raw material price reduction that has recently happened, because steel prices have come down a bit. Metal prices are coming down a bit. So those are the kind of stocks that we are looking from the consumer electronic space to look at from the next 12-month perspective.
How about the sectors to concentrate in 2019?
So sectors to concentrate in 2019 would be one, private sector banks, as well as capital goods sector. Rural theme stocks, because once the government does announce, which is an expectation, lot of stuff for the domestic, the farmers. So that particular segment is where we see a lot of growth happening going forward. And from that perspective, companies which are focused on the rural side could do pretty well going forward. Yeah, sure. So thanks a lot for your time. And if there's any major session that you want us to do, we'll be happy to reconnect with you and do this kind of a seminar. Once again, wish you a very happy New Year from IIFL Securities. Thank you.